Hi and welcome to the Market Alert for Friday the 30th of June 2023. Just before we continue, keep in mind that next week, Monday is half-day trading for the US, and then Tuesday the markets will be closed in observation of the Independence Day celebrations. So the markets are going to be fairly quiet or one direction, as they normally are during such times that the US is actually closed. So keep that in mind. And let's have a look at yesterday. So rate hike odds spike after stronger GDP, bonds and big tech battered. So it's back on the cards again, folks. And cyclicals prosper and yields soar after solid US data. As I've mentioned before in the Market Alert, the rise in inflation and then the pullback is no different than the way the markets work. You know, you get a bullish move to the upside, you get a correction, everything, seems okay, and then out of the blue, you get another rally to the upside, and that's what appears to be the case with inflation. It's happened in the 70s, 80s, and no doubt is going to happen again, which is why you're seeing this rhetoric by the central bankers. It's like they're being caught out. They thought, inflation had peaked, and now we're moving to the downside, and not the case at all. And US stocks were mostly underpinned by strong data, again, emphasising what I've just said. So let's have a look at the moves for yesterday. We'll kick off with the Dow. And starting off with the Dow, we can see that another strong move to the upside. As we mentioned earlier on in the week, the market came down to the 50 EMA. It was oversold, due for a rally. The rally has taken place. The market's moved higher. We've just gone through the 50 fib, which I've just removed off the chart. I should have left that on. And now 62, the golden ratio, is the next upside target for this market. Parabolic green, so heading in the right direction there. And yesterday's market, the market moved up nicely in the morning. News came out at lunchtime. As you say, it was strong, but they used it to shake everybody out. Down to the 200 MA, which is a powerful area. You see them buying back in, and then the market continuing to the upside. Overnight, we're just short of the high, and also above the close, where we can see there's been support in this market, so it needs just to stay above the close. Meanwhile, in the implied volatility, the measurement of risk has dropped to 2016, which is very, very interesting, because it's not been this low for a very long time, somewhere in the region of 3 to 4 years. Just go to the monthly charts, and you'll see we're sort of pre-COVID down at 1012, and 1006 down at 2018-19. So what you're seeing at the moment is this massive pullback in the implied volatility. The same for the VIX. And as the old adage is, that when the implied volatility gets to historic lows, then the market will make a significant move, but not to the upside, to the downside is the case. If you go back to the monthly chart, you'll see there where the COVID drop, and prior to that, you will see other moves as well, back in 2008, where we had major moves. This one being the recent one, obviously during the COVID pandemic, but again coming off really small lows. I'm not saying there's another pandemic coming, not by a long shot. There'll be some sort of black swan event, probably a financial one, I would suspect, to do with banks, etc. Not too far away, as it's just too quiet and moving to the downside. It can't maintain this. It never does, and it's just a matter of time before the underlying market will move sharply to the downside. In the German DAX, also moving higher, but struggling with that 38% retracement, although overnight at the moment the market managing to make a bit of progress. As can be seen there, we came off the 89% retracement. We were oversold, divergence and the crossover, and been moving up nicely, but we've got a bit of resistance there. We'll also have support at the 50 EMA if the market does move to the downside. But yesterday you can see very, very choppy. And as we head into the Independence Day celebrations, we can probably expect a bit more of this during today and Monday and Tuesday as well. The high was hit yesterday, and that's as far as it's got, but we are heading towards the high of yesterday at the moment on the overnight. Big shakeout yesterday lunchtime, as can be seen there, but you can see them buying back in there with demand and then moving the market back to the upside there. I didn't get to trade yesterday. I was so busy recording videos for the new course, and I will get back to it from Monday. Yeah, you can see the price action yesterday, a bit choppy, but we did break out in the 5-minute chart to the upside after demand and oversold, etc. And at whatever this level is here, I should imagine it's the close. It's the low, even better. We know what it's like for coming off the low, and absolutely straight off the lows there again with demand, crossover, oversold, as can be seen there, and then moving the market up. Didn't hold though. As we can see there, we came down to there and we went back up 89 and then moved back down to the low once more, where the market retested. Now it came below the low, and this is not uncommon. It'll go below the low, bounce back, and then a lot of people will get in, and then they'll just come out, take the stops, and then move the market back up. And also there you can see again how they've brought the market off the low. Same picture every time at these levels. Great levels to buy in at because you only need small stops. So overnight the market's a gap lower and has moved higher, and currently above the closes we've seen, and also the 200 MA, 50 and 20 as well. And nice green bars there at the moment as the market is moving high. Strong move to the upside as well there in the momentum as well. And in the S&P 500, this also moving to the upside at 62% retracement now. And a couple of days of absorbing some sell orders coming into the market here with a bit of supply coming in. But the market continuing to move to the upside there at the moment, but stuck at the 62%. In the 30-minute chart, again, you can see the reaction to the news as the market shook out, and then they bought back in and moved the market to the upside. We're already above yesterday's high in the overnight market, so that's good for the broader market. Meanwhile, in the UK, FTSE 100 stuck in a bit of a sideways move there, managing to close back above the 5-bar moving average and still moving to the upside. But we need to take that 38 out. This high of this bar, which is shown by the pink line there. We are oversold, so we are due for a bit of a correction, but the market's not making much progress there at the moment. In the 30-minute chart, we sold off down to Wednesday's low, which you can see there, and guess what? They bought back in at the low, and they brought the market back up, and so far we're above the close and the DP and the 200 MA, 50 and 20 and 5 as well. So maybe we get an attempt at yesterday's high later on this morning from the FT 100. And moving over to the currencies, the GBP JPY stuck in a bit of a sideways range. As we looked earlier in the week, this is between the 78 and 89% retracement in the monthly chart. Without the monthly chart, you wouldn't know where this market's trading, apart from the fact that it's moved up and trading sideways. But you need to know where you are in the bigger picture of these markets, and we can see that pink line there, which is at 188.836. That shows us an all-time high for the GBP JPY. In the 30-minute chart for yesterday, very choppy. Like I say, we're heading into Independence Day celebrations. And in the pound, also down again yesterday, as we can see, but the momentum is starting to move back to the upside for the pound. So this 62% retracement could be a bottom for this market, and also we see a crossover in the momentum as well. Blue line starting to move back to the upside. 30-minute chart for yesterday, we moved up, bit of a dead cat bounce as the dollar declined in the overnight. And then we see a massive sell-off of, massive sell-off, about 70-point drop there. And we traded down to what looks like, again, the low. That will be the low there. Yeah, it is the low. And the market finding buying coming into the market just getting to oversold and then making its way back on the overnight there. In order to continue to move higher in this market, we'll need to take out the 62% retracement from there, projected back. And if we do this, then we head towards the 78.89 and yesterday's high, but that will be dollar dependent, of course. While I'm thinking about it, I've just noticed that I didn't cover the economic news for today. So have a quick look at this. There's more inflation news out today. We've got the CPI flash estimate for the Eurozone, and then over to the US for the PCE index and revised US consumer sentiment. So some more news today. If this comes out strong, likelihood the markets are going to move higher once more. Okay, let's have a quick look at the metals before we conclude. And yesterday the silver market coming under pressure, obviously, because we just saw that the dollar was up. So what we need to do here is draw in some potential downside targets, as the upside targets aren't being hit at the moment. So let's have a look and see where we are. Let's just spread these out a bit. And you can see there the downside targets for silver if it continues to move lower or be shaken out lower to the downside. Still an absolute bargain at $22 an ounce. 30-minute, you'll see the hammering yesterday on that news, despite the fact that it's strong and it's inflationary, and normally you would expect gold and silver to go up, but of course the prospect of raising rates also increases the chance of a rate hike as well. So that's why the metals were under pressure yesterday. Above the close on the overnight, good recovery though, did bounce back. Let's have a look at gold. Still in this decline, so they're still under a lot of pressure. You're going to have to watch that 200 MA for the gold market, as can be seen there, 200 MA. And in the 30-minute chart, again, you'll see how gold was hammered, allowing the central banks to buy more gold. Look at that volume there, and then they brought the market straight back as well. Okay, that's it for this one. Have a great weekend, and as ever, thanks for watching. See you in the next.